Hello everyone! Today I'm going to discuss all about globalization and international trade as well as the corresponding examples under it. But first of all, let us define what globalization and international trade are. What is globalization? So globalization is a word used to describe the growing interdependence of the world's economies, cultures, and population brought about by the cross borders in terms of trading of goods, services, and also the technology and flows of information, investment, and people. So in this topic, there are called interaction of people, interaction of cultures, interaction of societies, and also the politics, which all of these integrate through a worldwide network of political ideas that has affected the products people consume, the environment, the cultures also, and the idea of exchange between the other countries. And one relevant example of globalization is the existence of multinational corporation, which simply refers to a business, and one of these is McDonald's. McDonald's is a multinational fast food corporation which owns 37,855 restaurants spread over 120 countries and territories as of 2018 with 1.7 million employees, and it is the second largest private employer in the world behind Walmart. Next is international trade. International trade is the exchange of capital, goods, and services across international border. So trade means a general marketplace of buying and selling goods. In simple words, international trade is the import and export of goods and services. There are three types of international trade: the export trade, import trade, and entrepot trade. Export trade is selling of goods and services out of the country, and import trade is goods and services flowing into the country. And lastly, entrepot trade is a combination of export and import trade, and also known as the re-export. It means importing goods from one country and exporting it to another country after adding some value to it. In finished goods, the examples of international trade is this. An aircraft is assembled in the United States will be considered an American product, even if it contains the components and parts from Europe and Japan. So this process is known as the import and export. So I have another example in trade. In trade, it is the act of exchanging one item from another, or one item from money. Just like in barter system, there is pagpapalitan.
Hello everyone. Today I will discuss international finance. First, what is international finance? International finance, sometimes known as international microeconomics. This is the study of monetary interaction between two or more countries, focusing on areas such as foreign direct investment and currency exchange rates. There's the understanding of international finance. It deals with economic interactions between multiple countries rather than narrowly focusing on individual markets. Second, I discuss global investment. Global investment is a term used to refer to a strategy of investment that is not constrained by geographical location. Global investing is extremely complicated, difficult. In fact, it can be downright dangerous because of a million factors affecting companies and markets of lightning fast speed. Global investment risk is a broad term encompassing many different types of international risk factors, including currency risk, political risk, and interest rate risk. International investors should carefully consider these risk factors before investing in global tasks. By globalization investment, market has participants that can buy stocks, mutual funds, exchange traded funds, or ETFs, or American Depository Receipts, or ADRs, to gain access to the to the shares of internationally based companies. That's all. Thank you.